Steve Liesman joins us with the results of the latest CNBC
Nice way of saying
Fed Survey.
And we have some unique data, Andrew. I'm talking to you, right?
Yes.
You don't have to talk
disregard.
to you.
Disregard.
Helping support the bull market, yeah.
We're going to talk about that.
Yeah,
but also we have
that.
some unique data on the expectation for how long this hold is going to be. And the expectations for the hold keep getting extended. Let me take a look at the overall Fed expectations here. Pardon me. 100% think the Fed will be on hold in January. Not much happening. 49% when we ask them, what's the next move going to be? They say it's going to be a rate cut, and that's not until November 2020. 32% say the next one will be a rate hike. That, and the average is not until March 2021. But take a look at the median. We said, okay, what is the average, the median person say when the next move will be? And we looked at the last three surveys. In October, the median said the next move is 5 months out. In December, the median said it's 6 months out.
That's the thing. When you're looking out that far, all the way to November and beyond, so much could happen.
So much can happen, but the reason we ask is not because we think they're right about the future. We want to know what people today think about the future. Yeah. And today they think the next move is 12 months out. So there's this idea has built in, it is actually doubled of how long the Federal Reserve will not do anything. Let me move on and take a look at some of the reasons for the rally. Before you get excited as to why these things don't add up to 100%, we asked them to name the top 2 choices on a list of 6 or 7, and here are the top 3 of those choices. So 66% said it's easier Fed policy, why this rally. Trade truce is in the second place, and then the easing of recession fears is out there. A couple quick commentaries.
But wouldn't the top one and the bottom one?
They're related. Yeah,
they're
completely
related.
The top reason here on PNC Financial says the Fed has the economy's back, so that that also puts a floor on the stock market decline, followed by a quick and complete rebound by the dips, they say. And over at Haverford, they're writing the combination of modest growth and contained inflation makes the case for no need to change policy. The closer we get to the election, the less the Fed will want to be a political ping-pong ball being slammed by both sides. The next policy move will not be until 2021. We got a lot of commentary like that, folks, in our Fed survey.
So it's the Fed. But by the way,
I think it's the Fed with a good backdrop.
Appoints the chairman, and therefore, you want to give the president the credit or no?
You can give the president credit. He didn't really like his Fed chairman after a fashion.
But now he probably
eventually,
does.
I think Powell got around to the right policy. I think where the debate is right now on the board that I can hear, it's this expansion of the balance sheet. And a lot of people, there's a lot of graphs going around on Twitter and in my inbox that link the movement of the market up with the expansion of the balance sheet again.
November.
So the question is this a liquidity thing?
I just think of the news cycles between now and November. It boggles the mind.
Well, yeah, and this January is a great example of that, where you thought you were coming into a lot of things out of the way, a lot of clearance.
Do last year.
And then you have Iran straight out of the gate, and then you have a coronavirus. And it just tells you how rapidly the situation can change.
It's crazy.
But you know what? We can sort of group those together. All of those things you mentioned, Becky, are things that would tend to cause the Fed to reduce rates.
Right.
The list of things that would cause the Fed to hike, they're not only... there's fewer things on the list, but the magnitude required is greater. You can imagine a modest scare on the coronavirus or any number of these things, maybe bringing the Fed back into thinking about cutting. But what kind of inflation is required right now for the Federal Reserve to begin hiking again? So the risk is all, if there's risk there, to the downside on rates and not to the upside,
that's a fair point.
But some people think that's building up a lot of risk to not being to being lulled into a false sense of security with inflation. That was one of the things that Tudor Jones and I think Dalio were saying in Davos.
Heard in Davos.
That we're... It would take a lot.
Not to mention the bubble risk, which is the one we don't talk a lot about.
But maybe innovation is going to keep us. We're in this new world. It's different this time.
I love that phrase.